Here is the number that should stop you scrolling: $9 billion. That is how much client money Bitwise manages, and today, on the 25th of August, 2026, it stopped asking clients to hand over their assets. Instead, Bitwise has gone live with automated token portfolios, or ADPs, which take Coinbase's newly launched tokenized US stocks and automatically rebalance baskets of them inside investors' own crypto wallets. For over a century, professional fund management meant surrendering control. Now the model comes to you, while you keep custody. The trigger was yesterday's announcement on the 24th of August, when Coinbase debuted tokenized versions of Apple, Nvidia, Meta, and Alphabet on its base network. These are not synthetic price trackers. Coinbase says each token is backed one-to-one by an actual equity share and carries shareholder rights, subject to vesting conditions and an ADGM-approved prospectus, ADGM being the Abu Dhabi Global Market Financial Center. Bitwise then moved quickly. Its first 3 portfolios went live this morning: MAG7X, Robotics, and AI Leaders. MAG7X is equal-weighted exposure to Apple, Microsoft, Nvidia, Alphabet, Amazon, Meta, Tesla, and SpaceX, meaning no single mega-cap dominates. The robotics portfolio includes Tesla, Nvidia, and Amazon, while AI Leaders spans Nvidia, Microsoft, Alphabet, Meta, Amazon, SpaceX, Tesla, and SanDisk. The methodology access fee is 0.15%, excluding trading and platform fees. Why does this matter? Because it changes the custody bargain. In a traditional fund, you transfer assets to a manager and trust their balance sheet. With an ADP, the rebalancing algorithm interacts with your wallet while you retain self-custody. That reduces counterparty risk, though it increases personal responsibility for private keys. It also expands distribution. Eligible non-US investors can now get exposure to US equity themes without opening a US brokerage account. Glider's chief executive Brian Huang put it as global access to institutional managers on-chain. The wider context is that the tokenized asset market has reached about $38 billion. Bitwise alone manages roughly $9 billion, so its entry signals that mainstream asset managers now treat tokenized equities as a distribution channel, not a novelty. The near-term direction is fairly clear. Expect more themes, more assets, and more pressure on traditional fund fees. The 0.15% methodology fee undercuts many active funds, but trading and platform costs could still add up. The real test will be liquidity, regulatory clarity, and investor behavior. Tokenized stocks in an ADGM-approved framework are still young, and self-custody means the investor holds the private keys, not a custodian. If that risk is managed, the next logical step is automated portfolios for fixed income, commodities, or even private assets. For now, the watchpoint is whether Coinbase tokenized stock volume supports daily rebalancing without excessive slippage. The takeaway is simple. Today's launch is less about a new product and more about a new relationship between investor and fund. Bitwise has shown that a $9 billion manager can place a professional strategy inside a wallet you control. Wall Street's custody model is not dead, but it is no longer the only option. The $38 billion tokenized market just gained a serious use case, and the line between traditional equity investing and crypto infrastructure has become visibly thinner.